Quick check on the markets. Dow down 42, NASDAQ down 18 and change, S&P down 8 1/3, futures weakening again. Today, the first day of CNBC's $1 Million Portfolio Challenge. With that in mind, we're asking our top market guests where they'd be putting $1 million. Our next guest last joined us just over 2 weeks ago. Couldn't have been more right on his call to watch gold as an indicator that the market would head south. This Uber Bear says the price of gold is a warning sign investors are ignoring. And he adds, ultimately, the market will collapse.
Well, you just described the U.S. market as being bulletproof, and I think gold is telling us that it's about to get shot full of holes. With the price of gold rising the way it is, it's at $670 an ounce, it's telling you that foreigners are losing confidence in the future purchasing power of the dollar.
And I wore my Peter Schiff tie. He is Peter Schiff, president of Euro Pacific Capital and author of Crash Proof, How to Profit from the Coming Economic Collapse. Joins us now from Stamford, Connecticut this morning. So, with that in mind, Peter, where would you put $1 million right now?
You should have worn your bulletproof vest, instead of that hard hat.
I don't need one, Peter, because I still think you're wrong. But anyway, where would you put $1 million?
Well, in my book, Crash Proof, I got 3 chapters where I talk about where to put your money. The first thing is to get out of dollars because, it's possible that in a few years, $1 million could be pocket change. So what you need to do is get into foreign assets. You need to get into U.S., foreign currency denominated conservative stocks. We're buying a lot of utilities, property trusts, buy natural resources, buy this dip in precious metals, particularly gold. And also have a lot of cash, but not dollars. Have foreign cash. Have Swiss francs, euros, yen, Australian dollars, other currencies.
Well, what we're seeing right now in the world markets, doesn't it tend to tell you that there's no place to hide?
No, that's not true.
Well, let me finish. Stocks have been coming down. Gold has come down with stocks. Oil has come down as well.
Sure. Look, there's a lot of leverage out there, and there are leverage speculators that are covering. But the difference is, for example, gold is in a long-term bull market and the fundamentals are great. Stocks are in a bear market, the fundamentals are lousy. I hear you talking about the fact that the fundamentals haven't changed. You're right, they haven't. They're terrible. They've always been terrible. And this, decline might have started because of China. That might have been the pin. But now the air is coming out of the bubble and U.S. stocks are falling, and it's got nothing to do with the price of stocks in China.
Peter, how much further, in your view, will U.S. stocks fall?
Well, I think, stocks peaked out in 2000. And sure, the Dow made a nominal new high. The S&P and the NASDAQ did not. But adjusted for inflation, we're still way below those peaks. I think we're headed south.
True.
I think even nominally, we're going to go back down to the lows in the NASDAQ and the Dow of 2002, and we might even take them out.
It brings us back to Mark's question, though, which is if the U.S. markets are going to fare so horrifically, Peter, it's tough to believe that, buying a foreign currency would do any better. If that's really true, the whole global economy has to be in trouble.
No, it's not. See, the biggest problem for the global economy right now is what is propping up the U.S. and consumer. The rest of the world is propping us up. We're using up 80% of their savings. We're blowing it to consume. We are using up the world's resources, but we're not producing. We're not exporting. We're not manufacturing. Once the Asian central banks let the dollar collapse, all of our purchasing power is going to move east. And then the global economy is going to boom without the United States because you're going to have billions of consumers in the rest of the world who are going to be enriched and are going to finally start to consume the fruits of their own labor. And we're going to be left with nothing but our own worthless currency.
If the U.S. currency were to collapse, it would take down China and Japan with it, Peter.
No, it wouldn't. It would liberate them.
They have $1 trillion worth of dollars.
So what? Look at how much they have in their own currency. See, their own currencies are going to go up in value by far more than what they lose on their dollar holdings. Sure, they're going to take a hit. They loan money to us and we can't pay them back. That's a problem. But going forward, the minute they bite the bullet, they're going to see a huge increase in their own standard of living.
And where are all those goods made in China going to go?
They're going to stay in China. The Chinese are going to be rich enough to consume them themselves. It's Americans who aren't going to be able to afford them. That's the difference.
All right. Peter Schiff, thank you very much.
Mark, read my book. You'll understand.
I remain skeptical, but thank you anyway, Peter.
Thanks for having me.
All right.